Thank you so much. Phoenix, Arizona. Marcos, thank you for sharing. We're going to have a pack. Thank you all so much for joining. If you're just joining, we're sharing us and the state where we're joining in from. Now we're going to give you a couple of more minutes after this video and then we can get started. Seattle, Maryland, PDX. All right. Thank you all so much for joining. It's 6:03. I think we can get started. Again, on behalf of XSITE Capital, I'd like to welcome you all to the exciting world of multifamily meetup and networking event. As you all know, we host this once every month. And today you all are in for an amazing treat. We will have one of the industry experts in IRA, Roth Ira, how you can use those kind of retirement vehicles to invest in real estate. We have Scott here that's going to be sharing a lot of insight about that. But before we get started, I need to share some information about the company and what we are up to. If you've been following our journey, you know that our CEO, Dr. Julius usually do the introduction. But unfortunately, Julius is not able to join us today. And I'll let Braden play a video to share the reason why they're not able to join us today. So please just listen.
Hello, people. How y'all doing? Hope you're enjoying the exciting world of multifamily real estate meetup presented to you by XSITE Capital Investment. Today, we are not able to be there with you either virtually or in person, but Tenny and the rest of the team are going to be taking great care of you. We're here in Owerri, Nigeria, representing XSITE Capital and taking care of people, volunteering in a surgical mission trip where we're doing a lot of total hips and total knee replacements for people that couldn't afford it. This is part of our mission as XSITE Capital to make sure that we give back to those who cannot afford these services. So we are hoping that you can join us in making sure that this mission is a reality for as many people as possible in the near future. Once again, I'm Dr. Julius, CEO and co-founder at XSITE Capital. And
I am Leslie Awasu, Director of Operations and co-founder at XSITE Capital.
And we hope that you will be able to really help us to achieve this vision of giving back and making a big change and difference in the lives of multiple people all around the world. Thanks again for joining us for the meetup. We look forward to seeing you next month. Bye.
Thank you.
That's powerful. A lot of people that have been joining this meetup and have been a part of our journey know XSITE Capital as a company that goes out and speak multifamily, bring the awareness of multifamily to the whole world. We go on the mountaintop and share the gospel of multifamily. And one thing that you all probably don't know about is that we're fully committed to providing great healthcare to people that cannot afford it, like our CEO, Dr. Julius, just mentioned. And some of those beneficiaries are me. I'm one of the persons actually benefiting from what's XSITE Capital is doing in regards to an extended family member that has been struggling from bad knee all through my childhood. I saw him when I was home in 2020, of 2020, his two knees on Thursday. And that is the impact that we are creating. And they have over 200 people scheduled to do surgery over the period that they're in Nigeria. So this is a great mission that we are onto, and we will encourage each and every one of you to join us in any capacity possible. And we're going to share some information as we continue to go on the journey. Now, that's about XSITE Capital on our mission trip. For the reason why you're here today, we have one of the top IRA and Roth retirement accounts custodian here to share with you all about how you can invest family or any kind of real estate assets using your retirement account. Now, Scott Maurer, he has been helping us at XSITE Capital with a lot of our investors that have retirement account and wants to get involved with real estate. He has helped countless members of our communities to get involved. I'm going to go ahead and allow Scott to introduce himself, share a little bit about his bio, and hopefully today is going to be one of those very, very important day of you understanding the ways or the different strategy you can use to invest in real estate. Please, Scott, you go ahead, take it away.
All right, thanks, Tenny. I appreciate you guys having me back on, and hopefully everybody who's listening tonight live will take away a lot of really good information and about, as you said, how you can use your IRA to invest in real estate. Our company specializes in helping people who have monies in IRAs or old 401ks actually get some of that money out of the stock market and invest it into things that you know and can control. And for a lot of our clients, that is real estate assets. Am I okay to share my screen?
Good, Scott.
Okay, good. Let me pull up my PowerPoint then. So you guys should be seeing that now. So yeah, so we're gonna talk about how to use your IRA to or again old 401k. We're gonna go over the different account types and how you can invest in multifamily. There's a lot of different things you can do with your IRA, but we're gonna focus obviously on multifamily tonight. Just a little bit about myself. I'm the Director of Business Development for Advanta IRA. I've been with the company over 16 years. And during my time, I've helped countless individuals, whether they're investing in single family homes, private mortgage notes, and for the last 4 to 5 years, just seen a tremendous growth and uptick in people using their IRAs and their 401ks to invest in multifamily. So that's why I'm happy to partner with XSITE Capital today and talk about obviously what we do and how that could help you, and obviously help them raise capital as well. Said been with the company since 2006. I am a licensed attorney by degree. I do not do any legal work for Advanta clients, but that is my educational background. And my contact information is here on this screen. It'll be at the end of the presentation as well. And certainly as we go through tonight, any questions you have, I think there's a chat box here you can type those questions into, and I think Tenny or Braden will probably monitor those. Or if you want to take your question offline and it's something very specific to you, certainly jot down my information. I'll take a call, shoot you an email, whatever works for you to get your questions answered. Just a quick disclaimer before I jump into the meat of the presentation. We don't do any, Advanta IRA does not provide any investment advice, and we also don't sell or endorse any products. As we go to talk about the different investments that our clients hold or investments you could hold inside your IRA, just note that with a self-directed IRA, it is completely up to you to find the investment and do your due diligence and be comfortable with the investment that you're making. That is not our role at Advanta IRA. No self-directed company it does investment advising. At least they shouldn't be. If they're doing it, you're with the wrong company. We do talk about legal and tax issues throughout the course of our classes, and even if again one-on-one discussions. But ultimately, we can refer you to an attorney, financial advisor, accountant, whatnot. If you have questions, you need specific guidance and specific advice, because we can't do any investment advice and we can't do any legal or tax advice. Even though I'm an attorney, I cannot do any legal work for you or give you any legal discussions. As I mentioned, at Advanta IRA, we've been around for almost 20 years. The only thing we do at Advanta is self-directed retirement plan administration. We'll go more deep into obviously what that is exactly here as we go along. We currently hold over $2 billion in assets under management. Our client, about 9,000 active clients. We're physically based in the Tampa Bay area and also in Atlanta. But we certainly work with people all over the country. Have a call tomorrow with somebody from California, talk to somebody today in South Carolina and in Texas. So it doesn't matter where you're located, we can certainly work with you. And how we really try to separate ourselves really primarily is on the customer service side of the equation, is helping people navigate obviously what we're going to talk about tonight. For some of you listening, you have an IRA, you have an old 401k, you want to invest in multifamily. What is that process? What is it? What do you do? How do you do it? And that's what we're here for, is to really walk you through not only getting it set up, getting the investment made, and doing all the reporting that goes along with it. So we really try to I've always thought, put myself in your shoes. This is a new concept for a lot of people, or something different and unique. You need people who are experienced to help you through that. So get into kind of the meat of presentation. Advanta is a self-directed IRA administrator. What does that mean to be what does it mean to be a self-directed IRA account? Self-directed IRA is not a different type of IRA per se. We'll get into the different types of retirement accounts that are out there. Self-directed refers to your ability to take your existing type of IRA, a traditional or a Roth, and invest in things, again, that you have complete control over. Investments that you choose, that you pick. Typically, they're all alternative, what we call alternative assets. They're things that are not publicly traded, so they're outside of that roller coaster stock market. That definitely, if people were watching the markets the last few days, the public markets, it's been a little crazy. Obviously, there's a lot of different things going on in our world right now. It's kind of some unique situations, but some unique situations with the oil prices and whatnot. But people turn to self-directed IRAs and these types of assets because it gets some of their money out of that stock market roller coaster. So a self-directed IRA is one which you are in complete control over what types of investments and what investments you're making inside your retirement account. You're not being limited by a bank or a brokerage firm who offers you those products. That's why most people have not heard of self-directed IRAs before. I'm sure some of you on the call have. Some of you probably have not. But the reason most people are not familiar with them is very simply that the banks and brokerage firms who offer IRAs and offer retirement accounts that most people have their funds with only offer you what they sell, right? So they're not going to sell you or tell you can buy real estate or you can invest in multifamily, because they don't do it. And then that's a business decision on their part. The IRS regulations surrounding retirement accounts allow you to invest in a very, very broad range of investments. In fact, the only two things you can't do inside an IRA, you cannot buy life insurance and you cannot buy collectibles. There's also some rules on as far as buying homes or real estate that you want to use personally. There's some restrictions there, but the IRS says you can't buy life insurance and you can't buy collectibles. Anything else is fine, but you have to have a custodian who's willing to hold that investment that you want to make. And again, that's where the brokerage firms have set up their business models to only buy and sell those publicly traded assets. It's why most people have not heard of a self-directed IRA. Their current custodian is not going to tell them that they have these other options, but you certainly do have other things that you can choose from. And when it comes to the assets that we hold on behalf of our clients at Advanta, 75% at least is real estate-based assets. It's people buying rental properties, fixer-uppers, condos, duplexes, single-family homes, short-term rentals, commercial real estate. And again, as I mentioned, that was something I think when I started back in 2006, and even up through probably 8 years ago, maybe or 8 or 10 years ago, a lot of people just saw people buying single-family homes. That's really the predominant asset that we saw. Every now and then somebody would buy into a private partnership. But really over the last 4 to 6 years, just a huge uptick in people investing in multifamily and finding out that I can use my IRA to invest in multifamily properties or syndications, which I think has been tremendous in a sense, because not everybody has the funds in their IRA to purchase their own rental property, to purchase their own fixer-upper, where you might have to have $150,000, $200,000, $250,000 or more to take down that property on your own and do what you need to do with it. Multifamily gives you the ability to kind of have that entry point where you can put in 25 grand, 50 grand, 100 grand, whatever the case may be, where you're not really in charge of the investment itself, but it gives you a way to invest in real estate and earn a nice return on your money. And again, get some of that money, get some of your funds out of the stock market. Outside of real estate, we do hold a number of, like I said, other alternatives. It could be private LLCs. There are people invest in notes and mortgages with their IRA, partnerships, foreign currency, commodities, cryptocurrency has been something that people have been investing in through their IRA. But again, still 75% of what we hold though is a real estate based asset with whether it's a note mortgage, whether it's the actual physical property, or again, you're holding a private partnership interest that partnership owns, a 16-unit building, multifamily or commercial property. So again, having been in the industry now for 16 plus years and talked to countless individuals, why do people choose to self-direct? Why are they calling? Why did somebody call me this morning to ask about using their retirement account to invest in an upcoming syndication? I think there's 3 reasons. For some people, it is a couple. For some of these people, they have multiple reasons why they're choosing to self-direct. Again, for a lot of people, it's stock market fatigue. I've already mentioned that once. I'll mention it again, and probably again before we're done. That people are tired of thinking that their only things they can do with their retirement account is invest in a market that they don't trust, especially they have very little control over. Again, as we've seen the developments in our world over the last few weeks and few months, nobody on this call had any control whatsoever over what's going on in our world, right? The things, the geopolitical events that are going on. And this, I'm saying it kind of generically because it appears, it appeals to really almost any point in time when we've seen people lose money in the stock market, whether it's personally or with their IRA or 401k. It's geopolitical forces outside of their control. So people are looking for other options that don't rely upon the markets, playing nice and being well to your accounts. So some people are looking for something different. For some people, there's the tax benefit. When you invest in an IRA account, the benefits of investing in retirement accounts are that your gains grow tax deferred or possibly tax free with Roth IRA accounts. So for someone who's in a high tax bracket right now, they may want to have a lot of their investment income returning to an IRA account so that they're not paying even more income tax on their returns. But for a lot of people, the reason is quite simple. It's a new source of capital. It's a sack of money that they didn't know that they had access to that they could use for the real estate investing. That was, like I said, I had a call this morning, a gentleman, that was the case. He wanted to invest in a syndication coming up. He needed 50 grand to do it. And you know what? I could use my IRA to do it. That's where my money is. That's why I'm going to use my IRA. I don't want to use my personal savings account and tap into that. Let's use this money in an IRA account. Again, it's a new source of capital for him. That individual I talked to, he already invests in syndications personally. So a new deal came up. I needed some money. I don't want to miss out on this opportunity. His IRA is providing him with that particular bucket of capital. So again, taking kind of just a step back from the different types of investments, I want to talk a little bit more right now on the different types of plans, that are out there. And again, self-directed refers to your ability to invest in things that you can control. But at their core, a self-directed IRA account is still looked at the IRS as either a traditional IRA or a Roth IRA, or maybe a SEP or a simple if you're self-employed or you own a small business. So the self-directed IRAs follow the exact same contribution rules, the exact same distribution rules as all of these particular IRA accounts. Again, the difference with a self-directed account is what you are placing your money into as for an investment. So if you have any type of IRA account, again, traditional, Roth, SEP, or simple, you can self-direct those funds. It's just a matter of filling out the right paperwork to move some of those funds over into an account with, say, Advanta, where you can choose your investment. We also offer self-directed solo 401ks or QRP plans for people who are self-employed or have a side business. You can qualify to set up your own private 401k plan. We offer health savings and education savings accounts. Not really probably prudent for this call to discuss it any more than that. The other big bucket, though, that people I think sometimes forget about or they miss out on is really those former employer plans. Like when you leave an employer, the old 401k, 403b, 457 plans. If you're in the military or work for the federal government, you might have a TSP plan, a thrift savings plan. When you leave an employer, that money can then be rolled over into a traditional IRA account with no tax consequence whatsoever, and then open up your investment options far beyond what you would get in a 401k. I know for a lot of 401ks, they may limit you to, say, 10 different mutual funds to pick from, and that's about it. So once you leave an employer, though, you're going to want to get that money out of the 401k and into an IRA where you're going to have a lot more investment options. So again, those former 401ks get left forgotten about when somebody, you change a job, you're more focused on the new job that you're starting, right? And what that means and what that looks like and how much time is that going to take and all those things that go all along with that change. And you kind of forget that you even had your old plan there. So any type of IRA, any type of old employer's plan, the one accounts, the kind of one group of accounts that cannot be self-directed in many instances really are your current 401k plans, your current employer plans. As long as you're working for that company or working for that government agency, as long as you're still employed, a lot of times they restrict your ability to move the money out of the account. Sometimes if you're hit a certain age or a certain level of service, you might have access to some of that money. So if you're looking at a current employer plan as a funding source, you'll need to contact your administrator and find out what your options are. So again, just remember, any IRA, any old employer's plan is going to qualify to be self-directed. And the mechanism of getting that money moved from where it's currently held into a self-directed IRA is either by doing a transfer or a direct rollover. And this is moving money directly from either IRA to IRA, which is considered a transfer, or direct rollover is old 401k, old 403b plan to an IRA account. There is no tax consequence to moving money from those other custodians into a self-directed account. As long as the money never touches your hands, it is a non-taxable event. So I know I've talked to a lot of people over the years who have maybe talked to their advisor and said, hey, I'd like to take some of the money in my IRA and put it into real estate or put it into a syndication. And their advisor warns them that that's going to be a taxable event, because the advisor, from their point of view, because they don't hold alternative assets, they think you're pulling the money out as a distribution from your IRA account and taking that money out personally, which is subject to taxes and penalties. But when you open up a self-directed account, and this is, again, a part of the process we assist with, is getting the money transferred directly from custodian to custodian so it doesn't touch your hands. And there's no tax consequence whatsoever. Additionally, when you're moving money from IRA to IRA or from 401k to IRA, you can move any amount that you wish, and you can do it. You can make that movement of funds as often as you'd wish, as long as there's paperwork going back and forth between the custodians each time you move the funds. There's no tax consequence. So if you have an account, worth a couple $100,000, and you only wanted to put $50,000 into an upcoming syndication, then you only need to transfer or roll over that $50,000, and you can leave the rest of it invested where it's at. As your investment earns income back to your self-directed account, you can even transfer that money back to your other custodian. So a lot of people don't realize how flexible it is and how you can be to move money from these retirement accounts and in between them all. Let me take anyone have any questions so far? I don't know if any questions have popped up in the chat box.
Yeah, we have I think we have a question here from Ngozi. Do you want to just go through everything and then we can take the questions when you're done?
We can, yeah. Although I just pulled up some of the questions. I see someone just asked, doesn't one have 60 days to put the money back? And I'm going to answer that since I'm right on this slide right now. So no, a 60-day rollover is when you pull out money personally. Yes, you have 60 days to put it back in to avoid any tax consequence. But when you do a direct transfer or a direct rollover, because the money never touches your hands, there is no time component at all. So you can transfer money from, let's just say, Fidelity to Advanta, make an investment for 3 to 5 years. The investment pays off and transfer the money back to Fidelity at the end of it. There is no 60-day requirement like there is if you actually pulled it out personally. And again, that's something we help you navigate up front.
And there's a question from Ngozi saying that can an LLC single owner have both a Seth IRA and a solo plan, or is it one or the other?
So that's a great question. That's a little complicated, maybe for what I'll answer your question very easily and say you can have both. I can tell you though, most times people do not. A solo K is typically for people who don't have any employees. It's just you and your business. A lot of SEP IRAs are also set up that way, but with SEPs you can also have employees. So typically, I would just answer that question. Typically, you would have one or the other. You can have both, but the solo 401k, you can make your SEP contribution to the solo 401k and put even more money into it other than that. So that's, I guess, how I'll answer that question just to do it. I think somebody else asked, can you invest a 403b account? Absolutely. As long as, again, if it's a former 403b, there'll be no restrictions on it. If it's a current 403b, then you have to check with the administrator and see, kind of what options you have to roll those funds over.
Yeah, we'll just go ahead, Scott. We'll take all the questions.
Absolutely.
When we're done at the end of the presentation.
Yep. So again, purpose of this slide is just to let you know it's no tax, no penalties whatsoever when you move money into a self-directed IRA from another source. Now, I do have this slide up there. Kind of a lot of people, when we talk about using an IRA versus using like a solo 401k, for those people who qualify, a solo 401k can be a better option when investing in multifamily real estate. And the reason is there's a little known tax called UBIT. It's called Unrelated Business Income Tax that can apply when your IRA is invested into leveraged real estate deals, which a lot of multifamily deals obviously are. With an IRA account, if it's subject to this UBIT tax, the IRA can take deductions and depreciation to offset the amount of tax, but it is something to at least consider. I know for the first few years of an investment, especially the multifamily, even IRAs don't pay UBIT because of the depreciation and the deductions. But the solo 401k allows for larger contribution limits up front if you work for yourself, and 401ks are also not subject to this UBIT tax as well. So I think it's just a question we get a lot of times with multifamily because of this UBIT issue. But again, to have a solo 401k, one thing I always like to make sure I share with people, you do have to have either your own business or at least a side business where you are earning income and contributing some of that income into the solo 401k. The Iras does not like kind of shell solo 401ks where you just claim you have one, but you don't actually have a side job or you never make contributions to it. So it is a question. Again, this is something that I have a slide up for, but it really needs its own discussion on a one-on-one basis with individuals and looking at each person's individual circumstance. But there is kind of that's something that gets talked a lot about when we're talking about multifamily real estate. But kind of getting back, I mentioned there's kind of three main reasons why people choose self-directed IRAs. I think for a lot of people, again, the motivating factor is simply that the retirement funds are a good capital source, that it's a new capital source for them. And why are they a good source? I think for people who are raising capital or people who already invest in specific types of investments. The retirement funds, again, it's kind of like it's a repeat investor, or it's a, here's another deal that comes along. I don't want to miss out on it. I'm just going to use my IRA to do it, and use this different bag of money that I have access to, that I don't need any outside approval to use. I don't have to go to a bank to get to approve a loan to use this money. I don't have to get my advisor's approval. I can just simply make the decision on my own to move this money over. Hopefully, a lot of times people looking to put retirement funds into real estate, they're probably looking for either better returns or maybe just more consistent returns, right? They don't, in the stock market, up and down. And who knows what, you may have fantastic returns one year in the stock market, and then you turn around the next year, it's tanking. And again, so you want something just more consistent that allows you to sleep at night. But I think one of the main reasons why people like to use retirement funds, especially when we're talking about, say, a syndication where the money is, you're making a 3 to 5 year investment in a lot of cases, is that if people are looking to make that investment, you have maybe your retirement funds available to you, or you have personal savings accounts. I think the IRA, generally speaking, makes the better vehicle, because if you have a personal savings account, that's money that you have put away for a rainy day, right? Or an emergency, loss of job, unforeseen medical expenses that pop up. Usually the last place people will touch or reach for money when they need it is their IRA or 401k, because there's early withdrawal penalties. If you're under the age of 59 and a half, the IRS penalizes you, right? And it's taxed to you as well. So if I'm locking money up for 3 to 5 years, I might as well use my IRA account that I wasn't planning on touching for 15 or 20 years anyway, rather than locking up my personal savings account, which if I take the majority of that money and lock it up for 3 to 5 years, if I have an emergency, then a lot of that available capital is tied up, and I might have to then go somewhere else with different penalties or taxes. So I think for a lot of people, that's one of the reasons why retirement funds are a good capital source, again, especially for these more illiquid investments. So I think, and just a good slide to share if we have anybody on the call who is newer to real estate investing, to really kind of figure out what type of an investor are you, or do you want to be. There are certainly people who invest in real estate who are more active, who do rentals and rehabs. They go out and find their own properties. They deal with their tenants. They deal with the contractors. They have more control. They're making all the decisions themselves, but they're also spending quite a bit of their time and energy to do so. And so again, people who fit that mold, that's fine. They get that trade-off. But then you also have people who are more passive, who maybe work 9 to 5, who work, say, a W-2 job where you don't have the time, at least you don't have the time to go out and buy a single family home, or you don't want to spend your weekends dealing with your tenants or other issues. So you're looking for things like private placements, syndications, or private lending, where the time commitment really is up front. If you're investing in a syndication, you're making putting all your time in up front to evaluate the deal, do your due diligence, but then you make the investment. You're not bothered by the minutia. You're not getting the calls from the tenants at 2 a.m. when there's something wrong with the property. Of course, you don't have as much say in what goes on, and you're having any control over the investment. But again, for someone who's being more passive, that's the trade-off. You get your time, you still get to invest in real estate and earn the returns, but you don't get any real control over the decisions. One of our clients, I always like to mention, he called us it mailbox money. He's invested in a number of syndications, and on the first of every month, he checks his account to make sure all that money will arrive by the mail. All the checks came in and were deposited to his account, and that's all he has to worry about as that money comes in every month. Now, certainly, a lot of our clients are both active and passive. So they do some active investing, do some passive investment. I think that's again, for people who are just starting out, it's a good discussion to have when it comes to kind of where you want to be on the spectrum. So I want to spend some time kind of going through a case study on what it looks like to invest in a multifamily syndication, who does what in the investment. So this very first, this case study, Jane is the individual who has the money in the retirement account. She's got over 100 grand sitting in her IRA account at Vanguard. John has the syndication deal. He is looking for investors. He's got his subscription documents done. He has his PPM ready. and he has this offering, and he obviously meets Jane and provides her with the prospectus, with the subscription documents, for the investment. So at this point, Advanta is really not involved in the conversation, right? It's Jane and John having, a cup of coffee together and going over what the deal like. And then it's Jane looking at the details in the prospectus and talking with her advisors or her CPA to see exactly what's involved and what she needs to look out for. But Jane decides that, she wants to make this investment with John. She wants to use $100,000 from her Vanguard account. So what she'll do first, she'll contact us at Advanta. We'll get her the paperwork. She fills out the documents to establish the IRA account, give us her name her beneficiaries, give us her personal information, and letting us know, hey, my account's at Vanguard. Here's the account number. And then she transfers $100,000 from the Vanguard account to Advanta. So she'll fill out a form telling us where the money's at, and then our role at Advanta will be to open her account, get it established, and then submit that request directly to Vanguard to have the funds transferred over. And we will notify Jane, obviously, when those funds arrive. Now, once she has her account opened, we can then begin working with her on those subscription documents. So again, John has provided her with the PPM and the subdocs, and those documents need to be completed in the name of Jane's IRA account. So our role at Advanta is really to make sure that from start to finish, this investment is a tax neutral event to Jane personally, right? So that the money transferring from Vanguard is not taxed, that the investment gets made in such a manner so that if the IRS were to ever look at the overall transaction, they'll see that this is an investment that Jane made inside of the IRA. She did not pull money out of the account to make it. And we do that by making sure the subscription documents get completed in the name of her IRA. So Jane will be appointed to an account manager at Advanta. Each individual client gets their own account manager who will work with her and the provider to make sure that the documents, again, are completed in the name of her IRA account. The tax ID number that is used is Advanta's trust tax ID number, not her social. So again, those monthly or quarterly dividend checks that go back to her IRA account, that's all income to the IRA. It's not taxable to Jane personally. So we got to make sure that the investment provider does not report that income to her social. Before we will sign the documents, before we will send any money out of her account, we do want the client, in this case Jane, to review and approve all of the paperwork. So at Advanta, we will not send any money out of your account until you have initialed off and approved this specific investment paperwork. So it's kind of, again, one of the safety mechanisms that obviously we have in place to make sure that you're fully aware of the investment that you're making and make sure that you sign off on it. Going forward, so once she's approved the documents, we sign them, we send the $100,000 out of her account to the provider, and any future gains, so those quarterly distributions come right back into her IRA account. And then when that property, say, is refinanced in a few years and her IRA is, it's refinanced, all the investors are paid out, any of the profits that are made all come back to Jane's IRA account and simply deposited right back into her IRA account. So again, she's basically switching the mutual funds at Vanguard, switching those investments out, and instead making a multifamily investment inside of her IRA account. So all the gains that you would ordinarily accrue are all going back into the IRA. Again, it's a tax neutral event to Jane. The UBIT tax that I mentioned earlier, if it applied in this situation, it applies to her IRA account, and the IRA would pay that tax if it applied. It is not paid by Jane personally. So if Jane's in a high tax bracket right now, this is an investment that she's making, again, that's not affecting her individual tax return on a yearly basis. And again, she's getting a different bag of money to access. That $100,000 coming from her IRA account is now growing through her real estate investments rather than relying on the stock market. Tenny, that's kind of all I had as far as prepared remarks. I know we probably have a number of questions that have popped up, and I'm happy to answer some of those. And certainly, if anyone has any other questions as we go along, as we're come up here a little quick through that presentation, I apologize, and everybody's on till 7.
That's amazing, man. That's directly, direct to the point. How you can do it. I think we have a lot of questions coming in already.
Sure.
If you have questions, if you want to come on camera and ask the questions, that's allowed as well. If you want to type in the questions, we're going to read it out. But great job, Scott. I think a lot of us need this because a lot of people don't know how they can use their retirement accounts to invest in alternate kind of investment. So this has been very, very enlightening, not just for everybody, but for me as well. So let's go through these questions that we have here. So we've answered the question from Ngozi and Claudia. And then we have one, do you have any stats around how the average self-directed IRA performs less flexible accounts?
Yes, yeah, I saw. Yeah, unfortunately, I don't have any stats on really how self-directed IRAs perform to say mutual funds or stock markets. Because and number one, that it really is kind of hard because some of our clients invest in, say, precious metals. They buy gold, and so it's up and it's down. Some people invest in real estate that has longer hold times, or there's or they're speculating on an investment like in a private company where they put $50,000 in, and it's still 3 years later and they haven't been paid anything back yet because they're waiting on the company to go public. So unfortunately, there's not any stats that I can share. The only stat we really have is that about 4 or 5% of funds out there are self-directed. But that gives you kind of really no indication on how they can perform because, again, each situation is different. That's, again, the uniqueness and the benefit of a self-directed IRA. It's completely up to you. I mean, if there was an average and we could calculate it, you still may find an investment that's going to pay you far more than that. And then again, and you're choosing to make that investment. So it's, unfortunately, I don't have any stats on that.
Thanks, Scott. And then the next question from Christian is, can you please cover UDFI and where that comes in?
Sure. Yeah, and I apologize. I did kind of give it short shrift, but so UDFI is unrelated debt finance income tax. That's the same thing as the UBIT that I talked about, unrelated business income. That tax applies to an IRA in situations when an IRA is invested into leveraged real estate. So if it's an IRA account and it's invested in, say, a 70% leveraged property, so the underlying debt ratio is 70%, then that means 70% of the income that comes back to the IRA would be subject to this UDFI tax. However, the IRA, as I mentioned, would also get to take 70% of deductions and depreciation to offset that tax, and the IRS gives you an automatic $1,000 deduction each year. For that reason, at least for the first few years of a syndication, typically you don't even see UDFI come up, and you don't have to file the return if there is no UDFI tax. So it comes up in leveraged real estate situations. It can also come up if your IRA is invested into a business where the business is giving you back profits, a portion of profits instead of dividends each year. So that's, again, it's something Advanta does not make the determination if UDFI is going to apply, and if it does, how much. But if it does, again, it's a tax that accrues to the IRA, not to you personally. And so the IRA actually is the one that ends up paying the tax.
Thank you so much, man. Again, this recording is going to be shared with everybody that attended. If you have questions, please drop them. If you want to come on camera or come on audio and share questions, you're allowed to do that as well. But let's go through these questions real quick. Another question here said, should one convert from a regular 401k to Roth 401k as they go to a SD 401k? If you are over 60 or 70,
So that's a good question. And people ask a lot of times if you have a regular IRA. So let's take a quick step back and explain. So there are a traditional IRA or a traditional 401k. You get a tax deduction when you make contributions to those accounts. So you actually get a write-off on your tax return, and that money grows tax deferred. So as you invest and reinvest in those accounts, you don't pay tax. But with a regular 401k or a regular IRA, when you get to retirement age and you pull money out of the account, you are taxed at that time. So you still get the tremendous benefit of tax deferred growth. All right, you can grow your money that much more quickly. But then there's the Roth IRA that is kind of the reverse. And then when you put money into a Roth IRA, you do not get a tax deduction. but it actually grows both tax deferred, and ultimately when you get to retirement age, that money comes out to you completely tax free. So the Roth is a very powerful tool that a lot of people like to use. So getting back to the question, someone asked, should I convert from a traditional or regular 401k into a Roth 401k? And what a conversion is you have money in an IRA or a regular 401k. And you're like, I'd rather this money be growing tax-free inside the Roth instead of just tax deferred. The IRS will let you move money from the traditional or regular account into the Roth account. But when you do that, you have to pay taxes that year on the amount that you convert. So if I moved $50,000 from a regular 401k to a Roth 401k, I have to report that 50,000 as extra income that particular year. Now, the benefit is that, again, that 50,000 is growing now completely tax-free. And so all of my gains going forward are completely tax-free. But I do have that tax bill to worry about that particular year. So the answer to the question is, and should one convert? That, again, unfortunately, is definitely an individual situation that I would say talk to your CPA, talk to your tax advisor about, because if you have a year, even if you're over 60 and you have just a lot of paper losses where you're going to have very little income that year, it might still make sense to do a conversion to a Roth, because you know that going forward, you have some great gains coming in and they're all going to be tax-free, and you have the losses to offset the gains from the conversion itself. So generally speaking, people, the older you get, the less sense it makes. But again, it still is an individual decision.
Thank you so much, Scott. And then we have another question here from Elena. She said, what does it mean to have a checkbook controlled by leasing plan documents when it comes to solo 401k?
Great question. So with our solo 401k that we offer, some people call them QRPs, we offer what we do. The first thing we do with a solo 401k is we give you basically and lease you plan documents. So in order to have a 401k, you have to have a 401k plan document. You can have somebody draft them for you and give you a specialized plan. You're probably going to pay a couple $1,000s for that, or instead of just lease it from us for a few $100 a year. So you can lease the plan, and through us with a 401k, you can also have us hold all of the investments. So you send the cash to us, and we make the investments. So anytime you want to make an investment, you have to ask us to do it, and we go through that paperwork like in the case study I showed you. What checkbook control is it's also possible to lease or have your own 401k plan. So you could lease an Advanta 401k plan, get a tax ID number for that plan, and just use that information to go open up your own bank account. And then you have your own bank account in the name of the 401k, and you can make all your investments in and out of that bank account in the name of the 401k plan. So we call that a do your own plan, because you are acting now as the trustee and the plan administrator and keeping track of the money coming in and out of the account. But it does give you tremendous freedom and tremendous control because you're simply leasing the 401k plan documents, and then you're doing everything on your own through that bank account.
Thank you so much. And then we have another question here from Claudia Brown again. I already have a self-directed account, but have a plan administrator, not a custodian. Mm-hmm. What are your fees to be the custodian, and do you do the 5500 form?
So
I think you might want to reach out to Scott directly and consult.
I think so. That'd be a good question. 5500 form is an annual return that 401ks have to file. We can do those for those people who need those done. So that'd be definitely a question for Claudia to reach out to me on an individual basis.
Yeah, I'll recommend that highly. And then we have one question here from Paul. Normally, when making a real estate, you can roll over your investment with the 1031 to defer capital gains. Do we need to worry about that if we're doing this inside an IRA?
You do not. And that's the benefit with an IRA account. IRA accounts do not pay capital gains tax. So therefore, an IRA really is a 1031 exchange in itself. So when you buy and sell assets in and out of an IRA, it is automatically deferring capital gains. So you do not need to use a 1031 when you buy and sell inside of an IRA account, because there is no capital gains tax.
Thank you so much. And then we have a question from Marcus Meredith. What are the next steps to learning where to set up a self-directed IRA? Please reach out to Scott directly. We're going to share his contact information at the end of the presentation.
Yep,
You
I
can
just
reach
pulled up
out
the
to
slide
him
here too. Yep.
directly, and you can put your contact information up there so that people can see it as well.
Mhm.
And then there's another question from Elizabeth Marshall. Do the monthly returns from the syndication investment go back to the IRA, or does it come in the mail directly to us? If so, do we have to report this as an income?
Yep. No, the monthly returns, or the quarterly returns, however often they're paid, do go directly back to the IRA, and we provide both instructions for check or ACH. And because it's going back to the IRA directly, it is not income to you. So you as an individual do not have to report any of that as income, because it is just as you wouldn't report the income now if you were to buy and sell stocks. You don't have to report the income on your syndication investment.
Okay. And then we have another question here from, let's see where we are. There's a lot of questions. Please keep them coming. Scott, thank you so much for answering these questions.
No problem.
Thoughtfully.
Yeah, I'm looking at them too, Tenny. I think somebody asked what's the percentage of UDFI tax. Again,
Correct.
UDFI is calculated based on the percentage of leverage. So if the property and the underlying project is 70% leveraged, then 70% of your income is subject to UDFI. And UDFI is at trust tax rates. If that was a question too, you're looking what the tax rate is, it is at trust tax rates.
Awesome. And then we have one from Adam. Thanks for the information. Is this a good vehicle for cash flow, or is it meant to grow the IRA and draw at a later time after 59 and a half?
It's both. I mean, some of our clients use it because they get good cash flow, because it's still cash flow back to the IRA that they're not paying tax on. And you can draw it later. And some people use it as a growth, buy something at a good value and get growth at it. So I think both either cash flow or just long-term growth still works. We certainly have clients who over 59 and a half, who they get their monthly dividend check back to their IRA, and they simply just take it as a distribution.
Thank you. And then Joel Kalamba is asking, based on recent data, what's the average annual rate of return for syndicated multifamily real estate? Basically, that our deals goes from 15 to 25% annualized return. So it's very dependent on the kind of deal, where the deal is located, the operator, and the opportunity on the deal. So it all varies. And then Adam again asking here, are there fees for transferring back and forth between Advanta and Fidelity? We do have a fee. Sometimes we will charge. It gets a nominal like $20 fee to transfer the money back. I'm not sure if Fidelity has any fee on their end. But again, there's no taxes or penalties. And that's something I certainly work with people on. If you're going to be looking to move a lot of money back and forth between Advanta and Fidelity, with the investment payoffs coming in and wanting us to send the money out, a lot of times I will waive those fees for you too. So just make sure you mention that to me when we talk, and I'll make sure we get those fees waived. I think that's all questions we have in chat. Please feel free to go ahead and drop some more questions. I actually 7 o'clock right now. Let's see, what time is it right now? Well, it's 6:40. We still got 6 minutes to get a 7. So please go ahead and continue to ask a question. So Scott, I have one question for you. For folks that already have a self-directed IRA, are you able to help them audit their self-directed IRA to see if they're doing things the right way in terms of compliance with IRS?
We can. If there's people who have a self-directed IRA and you're maybe not happy, or you're a little concerned about your self-directed company that you're working with, I'm happy to chat with you and see, kind of how they work and how they operate. Our industry, though, a lot of people, there's only 4 to 5% of accounts are self-directed. There still are a number of different providers, and you're certainly going to find different levels of service out there. So I'm always happy to talk to anyone, even if I've always said this: if you even have trouble getting a hold of your administrator and you ask them a simple tax question that you just need answered, just give me a call. I'll answer it for you. You don't need to be an account holder for me to share some information with. So and to help you out. So I'm always happy to to be a resource, even on just general IRA questions. You could say, hey, you know what, I have an IRA account and I want to take a distribution from it, and I thought of you and wanted to know what those rules look like. I'm happy to discuss that as well and get those questions answered.
Sounds good. And if you know, we have an active deal right now, syndication deal in Columbia, South Carolina. Brady, please, if you don't mind, pull up that information on the screen so that if anybody is interested in using that vehicle, self-directed IRA to invest in any syndication, we have an active deal. So we'd love you guys to be a part of it as well. It's an exciting deal that we have. Class A asset, downtown Columbia, of course, for accredited investors. The details are on here. Brady, if you don't mind, please drop the link to the deal details on the chart as well.
I have a question. I'm sorry.
Questions? Go ahead.
No, I had a question. I was going to say, so I mean, obviously you mentioned like being an accredited investor. Just make sure people understand too. How did that work with IRA accounts? Because, for instance, on an IRA perspective, we handle the paperwork and the subscription documents. But I believe you all, when it comes down to the accredited investors, you're doing that on them as an individual, correct? This is not the IRA.
Correct. And we're going to do networking after this whole presentation. So please continue to stay on. We'd like to meet you all, learn about what you're working on, and if you need any help, if there's any way we can help you all. Please stay put. I think we're about to wrap this presentation up. Again, the slide we're going to share with everybody that attended the meetup. And of course, feel free to reach out if you have any questions at all. Scott, I wouldn't want to hold you. I think we don't have any more questions. So
yeah,
let me see.
Actually, I was saying, Tenny, I did see one question. Someone just asked, can we do this in all the states? And the answer is absolutely. We have people. I'm not sure we have a client in every state. We certainly have in quite a few, and we do have clients who live overseas. So the key distinction is if you have a U.S.-based retirement account, we can work with you.
Absolutely.
Does Advanta take any cut of the distributions, or how and where does Advanta make money?
Yeah, that's a great question, Braden. So our fees are just based on our record-keeping service. So, for example, on a $50,000 investment. There's about $150 or so in getting the account open and getting the investment made. That's our fee to do that. And then on an annual basis, we charge a flat $295 a year to hold the investment, do the IRS reporting, receive all the payments back in. We do not take any cut or percentage. It is just a flat record-keeping fee, whether it's $50,000 or $300,000. The work is the same, the fee is the same, and then the gains just all go back into your account.
Got it. Thank you.
So much, Scott. Again, we appreciate you for coming on. If you have any question, please reach out to him directly. If you cannot get a hold of him, you can reach out to us at XSITE Capital, and we'll definitely make sure you get a hold of him. He has been very, very helpful in our own deals with our investors. Very quick to respond. We highly recommend him when it comes to understanding self-directed IRA and how you can use that to invest. So thank you so much, Scott, for coming. We really do appreciate it. And again, we do really appreciate you for coming again.
Well, absolutely. Tenny, Braden, appreciate you guys having me on. I look forward to talk. Anyone on the call, give me a call, shoot me an email. We'll get your questions answered. Thank you again for having me.
Thank you so much, Scott.
Sounds good. And if you want to hang around for the networking, please do stay on.
Actually, right, I do have to get going, but thank you. Thanks.
I appreciate it.
Thanks.
So everybody, if you don't mind, this is one of the most interesting part of the meetup, where we get to see each and every one of you. If you don't mind coming on camera, we'd love to see your faces, and then try to learn more about you. Share what you're doing, and if you need any help, of course, network with other people as well in the meetup. We would love to see you all if you don't mind.
Or feel free to unmute.
No problem, Abel. Thank you so much for joining.
Hi, Chris. Hi, Joseph.
Hey, Chris. And of course, we're going to go based on people that come on camera first, and then we're going to go from there. Hi, Joseph. How's it going?
Okay. How are you all this evening?
Doing pretty good.
That's great. I am really take great heart with what Julius and Leslie is doing. You guys are really knocking it out of the park, and I love the way you all are taking time to share what you're doing with those that are less fortunate. I feel that, and I'm very appreciative of it.
Thank you so much, Joseph. Appreciate it.
As far as what my company is doing, we are the company that help family residents operate better. We show them how to co-opt their electric to create another income. We show them how to co-opt their internet service, and all of the services that you provide to your tenants. We help you organize that. We can create another stream of income. I'd like to bring, as an example, we signed up one hotel in Baltimore, Maryland, a 250 unit hotel. And what we were able to do, we were able to increase their bottom line by $8,000 a month, which they were very happy with.
That's a lot.
We provide the essential services, and you can reach out to me through Leslie or Julius, and I will get back with the information to you and see how we can help. And we do give free analysis of properties and show what we can do for that property. Thank you so much for allowing me the time to say that.
Can you please drop your contact information as well on the chat so that anybody can easily reach out to you? Chris, you can go next.
Hey guys, everybody. My name is Chris Tassell. We're syndicators. We buy old crummy apartments and make them into nice homes. I live in California, but we do invest in Texas, Georgia, and Florida.
Awesome. Thank you so much for sharing.
Great job by the team and the doctors. Awesome.
Thank you so much. And please drop your contact information as well so that people can reach out.
Will do.
Hey, Claudia, how are you?
Sorry, had to take the mute button. Doing well. I'm also in Southern California.
Awesome.
Yes, by wine country. I was invited by Albany, and just, I'm a realtor, but I'm being interested in the multifamily investment.
Where are you from specifically?
I am in Temecula.
In Temecula? Oh, cool. So we live in Bonita, a little south. So.
Oh yeah, I used to live in San Diego before.
Oh, very cool. And in LA. So I'm in LA today, but we'll have to meet up at some point.
That would be wonderful. So I don't know much about your group. As I said, I was invited to attend the meetup for the retirement, but like to know more about the group.
That's my first time too.
What have you been doing with multifamily? Have you started doing anything with multifamily investment at all?
Are you speaking with me?
Yes, Claudia. Have you started doing anything with multifamily at all?
Well, we have invested with couple of companies on their syndication as a
limited partner.
Yes, that's what they do. They do both. This company is out of New Mexico. It's called Titan Development. They are building stuff in Austin for Tesla, Amazon. So it's a combination of multifamily and commercial.
Okay, great. Well, we would love to reach out to you. Please drop your contact information, and we'll make an attempt to reach out to you to see if there's any way we can help, if there's synergy there for sure.
Great. Thank you so much.
You're welcome. And thanks for all the brilliant questions. All right. Anybody have any question? Anybody want to come online? Elena, Patrick, Nicole, Marcella. If not, again, reach out to us if you have any question. Braden has dropped our contact information here, XSITECapital.com. We have an active deal. If you want to learn more about the kind of deals we work on, you can see it on our website, or you can reach out to any one of us directly. We appreciate you, each and every one of you, for joining and staying on to network. Please share contact information again so that everybody can reach out, and we're going to share this recording. Thank you so much for joining, and I'm going to give you all back some time. So appreciate each and every one of you for joining. All right.
Thank you, everybody. Have a great night.
Take care, everybody.
Thank you.